This trading view indicator is about to blow your mind, and it's called the initial balance. Now, what the initial balance is the opening 60 minutes of the Asia session, which usually runs from the period midnight to 1 a.m. UK timing. Let's get the indicator on the charts. So first thing you need to do is go over to the indicators tab, and you want to search FX market sessions and click on the one made by Boytoki. Open the drop down menu on the top left, and once you have that open, in the settings, input your Asia session midnight to 6 a.m. UK time. For opening range, click yes. Then scroll down to opening range and choose 60 minutes. Hit OK, and that gives you your initial balance, the first hour of the trading day. Now, the two ways to utilize this indicator is, first of all, the direction in which price travels away from the initial balance. If we have price moving above the initial balance for the trading day, then in line with your higher time frame narrative, you need to be then continuing later on in the London or the New York session in the same direction that price continued outside of the initial balance. What's the second way that we can utilize this indicator? It's on the mitigation of the initial balance for later on as price is traveling towards. So as you can see here, price opens above the initial balance. During London, price comes down into the initial balance to mitigate before continuing on to the upside. Then later on during New York, there was a stall in price before price comes all the way back to take liquidity resting below the initial balance and then continuing into the next trading day. Here we have Asia session consolidating, price heads higher above the initial balance before London comes back to manipulate early buyers and mitigates the initial balance of Asia, and then continues a very strong push to the upside following the higher time frame narrative. Now, the other way that you can utilize this Asia session indicator is a draw on price. If price has not already mitigated and you are expecting a relief or pullback in price later on that trading day, you can use this example here as a good reference. Price opens above the initial balance, price continues higher and breaks further structure to the upside during the London session, but the initial balance has not yet been mitigated. So you would expect London lows to be liquidity, New York travels straight down way beyond the initial balance, and you could utilize this as your bias for the day, taking shorts.